There's a smart new website that will change the way you invest using social media.
LikeFolio.
Here to explain,
A team of brothers, Andy and Landon Swan.
of LikeFolio.
And they've always been building out great technology at the intersection of social and trading.
Powered by unique social data. Analyzed by legendary traders. The LikeFolio broadcast starts right now.
I just hope everybody appreciates this, because there's 3 or 4 NCAA games going on right now.
No kidding.
When we came into the Win Zone studio, Nick was like, okay, we're going to put some evergreen content out today. And then the first thing I do is reference the NCAA tournament.
Yeah.
But it's just hard everybody's paying attention to that. So today we thought we'd talk about something that wasn't necessarily referencing today's markets, and get a little educational up in here.
A little evergreen, man. A little piney.
A little piney. So today we're talking about our favorite trading setups. So, what do we look for? What's that one scenario or 2 scenarios where, man, I just got to get into this trade because this is the thing I look for that has made me profits in the past and reduce my risk, whatever it is.
So are we talking about from a LikeFolio data perspective, or from our personal opinion of excluding the data?
I think both. I think
technical or fundamental kind of thing.
I think that clearly for us in this room that have been utilizing LikeFolio data for long enough, and know the power of it and what it can do, clearly the 2 setups that we use the most, that our clients have used the most successfully, and that even the media tends to like the most, is when there's a strong divergence between what LikeFolio data is saying is going on Main Street in terms of consumer behavior, a divergence between that and what's going on Wall Street in terms of the stock.
Right. There's nothing better when one's going one way and the other's going the other. After, they track each other for a while, and then all of a sudden it changes and they break apart. That's when
And by far the most successful trades we've had is when the stock has tanked, starts to stabilize, and then we notice that divergence where the LikeFolio data is bullish. So giving us a big heads up, BB Bebe was a great example of that.
Yep. That was a big one.
That was a
it can go both ways too. We've had some bearish ones where everything just looked terrible on the data.
That one, it was Decker's Outdoor Brands.
Yeah.
Holy cow. That was crazy, because apparently Uggs boots went out of style at just the wrong moment for that company. And our data showed that with the stock up high, and it was just a bloodbath on the earnings. That was a great profitable
day. Like a 25%
bloodbath.
It dropped like 25% on earnings, if I remember correctly.
We totally saw that coming too. Sometimes I have to remind myself that we look at this data every day. We're looking at different patterns and seeing the predictions. I have to remind myself that we're the only ones that are doing that. Like we get this data out there and we share it when we can, but not everyone has access to this. And so,
but that's why we do this show. That's why we have the app. That's why anybody can reach out to us at on our social stuff, or Andy at LikeFolio.com, or Landon at LikeFolio.com. Just reach out anytime you're seeing something. We always appreciate that. Always be receptive. So those are the 2. I mean, that's the easiest stuff. We could end the show right there. Honestly, those are the 2 things.
Real quick, what's your preference, Andy? Do you prefer that the stock is still downtrending when you get flagged that the data is bullish, or you realize that the data is bullish? Or do you prefer that it's been downtrending and it's starting to stabilize, and then you realize the data is bullish?
I prefer for it to start to stabilize, because I understand, for me, LikeFolio data is, it's not the golden ticket. It's not the only thing that matters. And there could be a lot of times you'll see institutional funds, or for whatever reason, there's liquidation going on in the stock over a long period of time. And, there's no rush for me when something's falling to get into it, especially if it's falling slowly. because I think those turnarounds take a little more time.
I agree.
But yeah, I definitely like when the LikeFolio data is bullish and getting strong and the stock is falling slowly. That to me is just an opportunity to say, all right, let's see how big this divergence can get. Now, and the only thing that would change that is if there's a binary event coming up. So if there's a same store sales number coming out or an earnings report coming out, then that's when I'm going to go ahead and step into, sort of that. I don't need it to consolidate there. I want to get in and play.
The cat will be let out of the bag at that point.
Yeah, it either will or it won't. And if it,
right,
it
could be though. Your secret information, your advantage could be gone.
Yeah, exactly.
So you want to get in before that happens.
Exactly.
I prefer when the data tanks and it looks terrible for the company because I feel like markets react much faster and stronger to negative data. Like with the UGG boots thing. I feel like they're ready to, if there's something bad comes out, people are ready to sell because there's always a good stock. You can move your money into something else. So
markets on average move down 3 times faster than they move up.
That's why I like it.
Yeah. So being on the short side, being short and right.
Yeah.
Is definitely.
Those are rare though. It seems
quicker.
like we've seen more instances, especially lately of companies showing that they're doing better. So that's just kind of what happens in an up market, I guess. But
yeah, I think that's true. And I think it's especially effective on like the momentum type of stocks that everybody's talking about, that have a singular brand or product that drives most of their revenue. So like Netflix is a great example. If we saw Netflix just falling off crazy, in the LikeFolio data, that would be awesome opportunity, generally speaking, because it's a high flying stock that relies on one thing that we can track pretty well.
Right.
So aside from those two, which is really just a divergence between LikeFolio, social consumer data, and what's happening on Wall Street, let's go around. We'll start with Nick, go to Landon, then I'll wrap it up with outside of that divergent scenario, what historically, because we've all been trading 10, 15 years and
since 99 for me.
Yeah. And I think I was 98. I mean, we were hitting refresh on freerealtimequotes.com.
Freerealtimequote.com. That was all. We were like, oh my God, you can get these quotes for free.
That was awesome. Those were good days.
Your first stock was Cisco when you got that as a present.
Yeah, I was checking quotes on road trips for basketball road trips.
That's awesome. Yeah. You were in high school or?
No, college.
College.
Yeah. All right. So around the table, your favorite trading setups for a stock that you're not yet in, but you see this setup. Doesn't have to be chart related, whatever it is. The favorite setup you have that makes you want to jump into a trade. Nick, you kick us off, man.
As the options guy, I love rich volatility premium. So I focus on looking at the implied volatility chart, and I like to look at, 52-week history and 3-year history of the implied volatility, sometimes even 5-year history. And I really love when I see implied volatility at, surpassing 52-week highs and getting at 3 to 5-year high levels. So if you look at a 5-year chart and you've seen this implied volatility reach this level, say twice prior in the past 5 years, and then just completely tank from that level, it feels really confident that it's going to happen again. It's at this level, let's say 100% implied volatility, and looks like it's going to drop to 50 really quick. Sell premium, just go nuts selling premium in that particular underlying. So this recently happened in United Steel, where the implied volatility reached right at 5-year high levels. And then coupled with that, the stock was trading for $5.
Wow.
So we're talking about United Steel, $5 a share. Implied volatility was like 140% or something. I can't remember exactly, which was at 5-year high levels. And I just went nuts selling put. I could have just bought the shares, but I wouldn't have benefited from that excessive premium situation. So anytime I see that setup, I love it, especially if the VIX is also high in tandem with that, because then you're getting excess premium on top of excess premium.
So the VIX would be sort of that implied volatility of the entire market.
Correct.
So you're
Yep.
saying you've got a market that is full of fear and greed,
Exactly.
fear and or greed or whatever. Plus, it's also happening with the stock. In addition to that,
Exactly. So even if the stock didn't have those high implied volatility levels, the premiums in that stock's options would be a little juicier than normal because the VIX is high. But since the individual stocks implied volatility levels are also high, coupled with the VIX being high, you get juicy on juicy.
right?
It's like a double cheeseburger, man, a real greasy one.
Like a KFC. What's that? The double.
The double down.
The double down.
Wow.
That thing was crazy. I never had one.
I didn't either. I wish I would have.
I regret that.
Me too.
time.
That's in life. You regret the things you didn't do. In the KFC double down.
That's the burger that had chicken breast as the bun. Is that right?
chicken breast, and in between it was
Like cheese and bacon
cheese and bacon. I think.
and mayonnaise or something. Just
Heart
something
attack.
just egregious, crazy cholesterol mayhem.
I do regret not getting one of those.
I bet it was good. So yeah, that's what I love. I mean,
I like that setup a lot. Well, we're gonna end up with a bunch of good ones because
I could already name like 3 more.
Yeah,
I'm gonna keep it at that.
and most of these don't happen that often.
Correct.
That's kind of a key. It's not like something you're going to go scan for every day. You're kind of going to know when these are available, generally
Absolutely.
speaking, because the market conditions are different. Things feel different, I think, for a lot of times when these setups are possible.
I will say the
Yeah.
probability of that specific setup is higher when the VIX is higher. So when the VIX is say above 25, you can go out there and you can
that's
start
when you can
hunting.
look. Right.
But when the VIX is below 25, you may go several months without, having that particular opportunity.
Right. It's like there's certain times of the year that's probably not really great to go out hunting for bears because they're hibernating.
They're not out. They're
Like,
they're
you're
just
wasting
not
your
out
time.
there.
You strapped on your ice boots.
I've met so many bear hunters who would say the same thing.
Yeah, I mean,
I like that.
you strap on your ice boots, you get all thermaled up, you get out, you got your gear, your freeze proof gear, and you go out trying to track down some bears and just searching and searching and searching. And there's none, and there's none the next day, and there's none the next day. And then
I just
finally,
got this-
some experienced dude comes up to you and says, they're hibernating. They're sleeping underground, man. You're not going to see them till May. And that's when you say, I should have listened to Fenton. I should have listened to Fenton.
I just got this great visual of a big black bear rug under the podcast table here in the wind zone with the bear head just over there, just making a serious presence. That would be amazing.
That needs to happen.
We'll go bear hunting when the appropriate time.
Now in the winter.
Not in the winter. All right, my strategies. First thing I like to do is when I'm talking about long-term investing, I like to buy companies that I love the products of. It's very simple. For me, that right now is Southwest and Amazon. I really love those 2 companies. On my radar are GoPro, Tesla, Smith & Wesson, and Under Armour. I like all those products a lot, but I'm not in love with them yet. So if I'm talking about like a IRA or maybe my kids' college accounts or something like that, I like to do companies that I love.
Yeah, and just so people know, Landon's been talking about Southwest Airlines and Amazon for probably 4 years now. Maybe
longer on Southwest.
In terms of owning the shares, he's been talking about it for long enough. If you're looking at a chart, you can tell how balling this guy is because he has been talking about those for a while. Even when everybody hated airline stocks, oil was like at $100-something.
Yeah.
Landon was like, no. They're
still
legit.
turning a profit. They've been profitable forever.
That's amazing.
They're awesome.
All right, so that's cool.
And then, of course, as far as the short term or more medium term, I guess, it's totally different than what I like with the LikeFolio data. So I like to see the big move, the divergence where the stock's going up, the data tanks or vice versa. When I don't have access to the data and I'm just looking for a trade, I really like just a straight uptrend or a straight downtrend, nice and smooth, nothing crazy, and just buy on the dips when it's uptrending or short on the spikes when it's downtrending, something like a 2 or 3 year trend. I just feel comfortable. I feel like, yeah, this should continue. So this is a good entry point. as far as like going long and all that. So I'm not crazy into options, but my last strategy would be to listen to Nick because he's always got great ideas. And
That's a great strategy. I co-sign that strategy.
That's just a good life strategy.
it is.
It is. Hey,
It's a good strategy. Selling premium is really great, and I don't know how to look for it as well as Nick does, so I just like to listen to him. So those are my strategies.
Cool. Those are good. Mine's a little more complicated. I like to see a head and shoulders formation where on the right shoulder, the right shoulder fails. Listen, no, you guys. Listen.
that has an abandoned baby candlestick.
Yeah. Well, I like to see a 38. I like to see it hit the 38 fib,
Of course.
and then the VWAP.
If you're not
Switch
VWAPing,
lower,
you're not cracking.
and then I draw those lines.
If it makes a smiley face, go bullish.
Yeah. I draw those lines and you know what's happening then.
Well, once you put the Fibonacci fans in there.
Well, yeah. I mean, I'm not going to start down this road without my Fib fans.
Yeah. You gotta have those. And the arches.
Aside from that,
Stuff.
we always like to poke fun at the crayon traders drawing on charts all day.
Yeah, I mean there is some something to be said about like a really clean uptrend, downtrend.
Yeah.
Really clean support and resistance. That's undeniable.
Yeah.
But when you're taking all these backward looking tools that have no, they're all lagging indicators. They have no forward looking presence to them. It just doesn't make sense. It's just a waste of time.
Yeah. I do think that guys like JC Peretz, I always joke with him when we're sitting all-star charts
Yeah.
on Twitter. Always
He's a sharp
like
guy.
to, he's a sharp guy. He's a great technician. And, he's a legit guy because he's like, all right, support, resistance, trend. Like that's the deal. It's not all these formations. But anyway, I love to give those guys just a little ribbing though.
Well, I think that the technical analysis was super legit like 20 years ago, 15 years ago. And it's gotten less and less legit as charts have become more prevalent. Like before there was any charts and people were drawing it on grid paper and like doing it by hand, you could see these kind of things. Head and shoulders were probably totally reliable. But I think now that everybody's got the charts, you can click a button to automatically draw patterns. It's like,
that's true.
You're kind of,
well, every advantage goes away once everybody has it. That's
Right.
what the market is. I mean, the market is winners and losers. This is a closed system pretty much.
and I think also the move from eighths and teenies to decimals really hurt technical analysis.
Big time.
Because the support and resistance changes dramatically.
Big time.
It's like it's one more penny, no big deal. One more penny, no big deal. But you can do that all day. Whereas, it changed eighths, 16,
Yeah.
It's 16 now instead of 16 and 8. It's
the bid,
going down.
The bid flipped the ask.
Yeah,
that sort of
And
thing.
an argument I hear a lot is, well, there's X percentage of people that are seeing this specific formation right now and acting on it. So therefore it has to work, because the market's going to push it in that direction.
Right.
But the thing that they're not taking into consideration is there's, everybody has all this technology. They have these charts. They may not be drawing it exactly like everybody else is drawing it.
Right.
They may not be reacting exactly at the same time. So that argument doesn't really have much merit.
Yeah, and I think the only other thing I'd add to that makes the crazy shape technical analysis kind of stuff, the really complex pattern stuff, not something that I buy into, is if you think about it, if you're Goldman Sachs or if you're one of these massive institutional funds that can take an enormous position enough to move any stock that you want, and all of a sudden you see this obvious whatever pattern,
Head and shoulders
pattern, and there's this obvious head and shoulders pattern, and for a fact based on your own history there's going to be so many people that have their buy point here and their stop here, like because that's the way you're supposed to do it when you're a technician. Your ability to get people into and out of a trade and front run
Just
them
to hit the stock.
You flush them
hit the
out, flush
stops.
those stops
is
out.
just unbelievable. That ability, that power is unreal. And so that's the other thing that that kind of takes me out of that thing. I don't want to see the same thing that everybody can see. I don't want to see patterns that can be taught that easily. So
Great
anyway,
point.
that's my 2 cents. I'm going to get to my favorite setups now that I've kind of gotten off track. My favorite setup of all time is when a stock, especially small cap stock or lower dollar stocks, less followed, pull back after a big breakout. So the stock's trading $4 to $10. It runs up to 20 or 25 and then pulls back 30, 40, 50% from there and consolidates for a little while. I've just had a lot of success with that. And then I'll go long. Because I think that generally speaking, that initial ramp up has a lot. There must be some significant validity to why it's doing that. And then that momentum trade gets over. The wrong people got in. They get flushed out on the way down and it consolidates for a little while. And then that's how I think a lot of great uptrends begin, is by an initial breakout to the upside, pull back 30 to 50%, chill out for a little while, go sideways. That's where I like to go in. The one caveat to that was it used to be a lot easier. They used to happen a lot more because companies went public earlier. But now you've got companies like, I look at GoPro, Fitbit, Twitter, Etsy. I look at these companies and I'm like, if you'd have tracked them pre-IPO, that's exactly what their charts would look like. It would look like a big breakout up to $50 for GoPro, up to or $70 for Twitter or whatever, up to $25 for Etsy. It just so happens that those big breakouts are being taken into the IPO because the private markets are so much smarter now and aren't taking things public so early. And so then the pullback happens after IPO and you don't really see it as a breakout on the chart. You just see it as a IPO really high and then a flush out. And so I actually think that setup is occurring in some of these stocks now. GoPro, Fitbit, Twitter, Etsy. And then if I get
GoPro would be a great example of that potentially happening right now.
Yeah. And then if I get confirmation from the LikeFolio data that things are good on the street, on Main Street, then I'm ready to roll. That's my favorite kind of setup. It's harder to see now because it's not like Amazon was in 1998 where they were public before they were really legit. Now, Uber's still not public. That's crazy.
Yeah, that is crazy.
Like
50 billion valuation.
Right. Snapchat, like no one's going public anymore until the flush out's ready.
Right. Back in the day, it was pets.com was public before it.
Yeah. You were public before you should.
What was anybody know their highest market cap that they ever got?
No, that would be a fantastic stat to know.
It would be scary, I bet.
So pull back after a breakout.
So two questions. Do you think the psychology behind that pullback and then stabilization is the pullback is representing the flush out of the speculators and the people that don't know what they're doing? And then when it starts to stabilize, the market's found the right price, or at least, gotten a general idea of where they think the right price is. And then from there, you think it'll start to slowly trickle higher?
Yeah. I think that's a lot of it. I also think that you've got, you've got a period of time where people were buying the stock and then they see a big run up and, they're holding the stock and loving it. And then it starts to pull back and they're worried it's going to come back to where it was. And so they're selling a little bit emotionally. People that got in for a momentum trade are selling a little bit emotionally, pulls back nicely and then consolidates. And then I think from there that generally speaking, the next move up, is very important towards establishing a really nice long-term uptrend. So it's not like I'm looking for a spike back up. It's just, okay, now we've gotten a really good signal that something is going very right for this small company. And now I'm ready to get in after that whole confirmation has happened and after the initial momentum hype of the stock is over.
Cool. Yeah, I think it's cool for people to hear that type of interpretation, just to kind of really give themselves an idea of how you think that move is represented in the psychology and the build out of that stock price. It's just interesting.
Yeah, I think that's markets are all psychology.
Sure, absolutely.
It's 100%.
My second question is, do you have a specific amount of time that you prefer to wait once you see that stabilization before you start buying?
That's a good question. I would, for me, it's only like a week or two. Like, it's just this whole thing, this phase is obviously over, right? Mm-hmm. The stock is spiked. It's falling back down. It's not still falling back down.
You don't want to catch that knife. That's scary.
It is scary.
People lose a lot of money trying to do that.
Yeah. And this doesn't always work, of course. Nothing always does. But, no, it's like a couple weeks. No big deal.
Makes sense.
You don't have to wait 4 months or any crazy consolidation triangle thing or whatever. Just like that thing's over. That problem, or that the opportunity has been identified, because that's what caused the stock to break out. And the problem of speculators having driven up the stock too high and people getting weak knees as it falls back down, that problem is over. So you've got an established opportunity and you've got a dismissed or resolved problem. So that's kind of the two steps that I like in the trade. So
that's a great psychological setup. I like it.
Yeah. So very cool. This was awesome. Got some games to watch. This was, if you have ideas and you're listening, again, email Andy at LikeFolio.com, Landon at LikeFolio.com. Hit us up on Twitter. Be happy to hear your topic ideas for these. We're going to try to do at least one a week where we're talking through a little bit more, from our experience, educational or, generic trading stuff, rather than always talking LikeFolio data, which is obviously what we love, but want to broaden the base here.
Sure. I hate to leave people hanging because I was so curious about pets.com. So I looked it up.
Nice.
Yeah. I had to do a little back of the napkin calculation based on low share price and all this, but it looks like their highest valuation was around 400 million at their peak. And they, I think on their last quarter, they did about 10 million in revenue for the whole quarter.
Their last quarter, the most recent quarter?
The one before they folded up. Yeah.
Okay, gotcha.
So they were going to be at 10 million revenue.
40 for the year. Let's multiply it out.
So they were on a 10x sales. That's your big, that doesn't sound that crazy. I mean, you compare it to today's, what do they call them? Unicorns in the private market. We got $1 billion market caps left and right with less revenue than that. I guarantee it.
It's true.
But they were a retailer. They were selling stuff. They weren't a network. This was not going.
Right. They had .com. That was their biggest asset.
400 pets. That's such an easy. Pets.com.
It was kind of one that we all laughed at, and it worked out. Like, they were terrible. But you know what? We also laughed. I remember laughing at Amazon back in the day.
Yeah.
So dumb. Who's selling books online? That's the stupidest business, And now they're my kids' college fund because I love the company so much.
That was their Trojan horse into world domination.
Right. That's a cool thing about about investing, just period. Because if you'd have taken 50 grand and put it into pets.com and Amazon, two companies that you were laughing at the time.
Yeah.
Oh, wow. You lost 100% on one. That's a hilariously awful trade. And you would be mocked for buying pets.com and losing 50 grand. But you had 50 grand in Amazon. What would that be worth now? Probably millions and millions and millions of dollars. That's what's, you can participate. You can participate in this economy, man. I mean, wealth is being created all around you and you can participate, and that's very exciting. So
agreed.
With that, we'll leave it off. Hope you guys have an excellent weekend. We will catch you next week when we're going to have some insights into consumer stocks that are either loved or hated.
Peace.